Hey traders and investors, it's Serge Berger here. The trade I want to look at today is in LinkedIn. And of course, LinkedIn, as you can see on the chart here, last week after earnings got absolutely fallen apart. In fact, if we give you guys a little bit of a measure on this, you can see the stock on that one day fell about 40+% on the 5th of February, and that while the rate of change is actually slowed to the downside, what's interesting is that the implied volatility spike that we saw on that day continues to be there. So even though the rate of change has slowed down, implied volatility is still very high. In fact, implied volatility, if I look over on my implied volatility sheet, is still in about the 85th percentile of the 52-week range. In other words, very high, and that is giving us a potential opportunity. If we now have a look at the stock, you can see it's very far removed from all its medium-term moving averages, and that tends to, over time, give us a bit of a mean reversion move. The better way to look at this is through an 8 and 21-day moving average lens, and you can see even here the 8 and the 21-day moving average are very far removed from the stock. Now, a stock like this that gaps down after earnings is not something you want to necessarily step ahead of and get overly aggressive on the long side, which is why I think playing this via the options market, particularly when the implied volatility is still very high, is a smarter way to play it. If we look at LinkedIn one more time, a little bit further out, you can see also that the stock has now arrived at an area that has a lot of price history in the past, going back all the way to 2012 and 2011 when the company actually came public. If we look at the options market specifically, what I see is looking at the big round number that the stock is currently trading near, or that's actually just below there, is the $100 area. We can go out and sell either March or even April 100 strike put options or put spreads for very juicy premiums. As of when I'm recording this, the implied volatility is actually more than 50%, almost 60% on the March put options, and that's going to give you a big buffer when selling these puts or selling put spreads. I wouldn't necessarily look to do this until we have a little bit of price confirmation. So I'd like to see this stock get us maybe about above $107 or so on a daily closing basis. But then I think it does make sense to kind of construct the trade that way. And the stock then doesn't really have to bounce very far for the premium in those options to come in quite dramatically, even if one were to sell April options. So this is just a decent risk reward trade. I'm looking to set up again. I'd like to see a little bit of follow through buying, so the stock doesn't so we're not buying into the abyss, but rather we have a little bit of a confirmation buying below our feet. But that's one thing I'm looking at here. I hope this makes sense, guys. As always, please subscribe to my channel, like this video, and I'll see you in the next video.